Hey guys, you've tuned into Moneycontrol. I'm Manisha Gupta, and we are going to talk about the Chinese yuan impact on the commodities. Well, we have been seeing for the last 1 month on the kind of decline that the yuan has been putting forth, but the kind of decline that we've seen in the last 24 hours really has been quite strong. So we have seen the offshore markets hit an all-time highs of around 7.36, and the onshore Chinese domestic markets have seen the yuan at the lowest in 15 years. But the Chinese yuan has been declining as investors flee China on expectation that you could be looking at a stronger or a more stringent leadership shuffle there. Also, the senior officials who have been talking about reforms and monetary measures are all missing from the top leadership, and that tells you that we are looking at a very stringent and a more a power holding kind of a leadership now coming in for China. Also, there is a continuation of the zero COVID policy. That's another thing that has been bothering the markets and has been keeping the Chinese economic data on the weaker side. Also, the markets are looking at a weak investment in the property sector. There have been concerns there as well. If you look at the Chinese yuan itself, it's down by 13% in this year now versus the US dollar. This is the biggest annual decline that the Chinese yuan has seen since 1994. And because China is this major powerhouse when you look at commodities, 40 to 50% of all global commodities either are produced or consumed in China. So, with the kind of weak data that we're looking at, the kind of political changes that we have seen leadership way, and the Chinese yuan completely being sold off versus the US dollar is all bothering. Yeah, even with Chinese yuan, the forex reserves have been declining. Even for China, when they have to buy it in the international markets, the commodities are all dollar priced, so their purchasing power clearly seems to be going down with the yuan depreciation there. So, if you are an importing country in China, that means you are paying more, and clearly the country is not buying so more. If you look at the trade data in last 2 or 3 months, we have seen those numbers continue to decline. If you are an exporting country in China, then of course the depreciating Chinese yuan works in favor of you, and we have stronger numbers, by the way, come in for that as well. But looking at the commodities, well, China is the top importer for crude. It is a major importer and a producer for copper as well. And then China does tend to import soybeans, wheat, cotton, sugar, all of those commodities. So it's going to be quite interesting to see on how these imports really land up. As of now, we do understand that barring GDP numbers, everything else, which is manufacturing, retail sales, fixed income investment, all of those numbers have come in on the weaker side, and the property sector clearly is in shambles. So a lot of concerns with China, and the yuan being sold off doesn't augur well so much for commodities. Markets will continue to watch out on what kind of demand has China put forth in sense of commodities. We do understand that it's not so great is the reason you have most of these commodities come off its all-time highs or multi-year highs that we've seen in 2022, and the concerns until zero COVID policy and the kind of leadership that China seems to be making in right now, if those concerns do continue, then there is some more pressure that you could see for the very near term for the industry.